Good afternoon, good evening, and good morning to all of you for joining in again for this third keynote session that we have for Global Economic Ideas Festival 2022. Day one, today, Wednesday, November 23rd, 2022. Again, let me repeat that this Global Economic Ideas Festival has been put together and, of course, hosted by the ICCE, the Institute of Certified Chartered Economists. The ICCE is a global professional body providing a qualification and a certification in economics. I'm sure most of us are familiar with professional qualifications, which are available in other disciplines like in accounting, in finance, in marketing, etc. So we are offering this qualification in economics. So if there's anyone here on this session that is working as an economist, aspiring to become an economist, or your current role requires that you have some knowledge in economics, then of course we recommend the ICCE to you. And by so providing this qualification, we also try to create, various means of learning and collaborative learning, one of which is what we've created here today called the Global Economic Ideas Festival. The virtual edition, the first edition, of course, the virtual edition. At this point, we'll be going straight into our next session, which is looking at the Indian economy, risk and opportunities amidst COVID-19. But to do that, I will welcome Professor H.K Pradhan, who is the chairman of the Governing Council of the ICCE, and of course, the co-host for this session that we have. So, Prof. Pradhan, please, you may kickstart.
Good evening, good afternoon, where you are, and thank you very much, Paul, for welcoming us to this session. This is a very important session. We discuss on the panoramic view of the Indian economy post-COVID-19, the risk and opportunities. The speaker of this session is Dr. Soumya Kanti Ghosh, the Group Chief Economist of State Bank of India. I understand that Dr. Ghosh had suddenly some other engagement, but he would be speaking, he has already curated his speech, which we play on now, followed by Q&A. And Dr. Ghosh is the Group Chief Economist of India's largest bank, which is one of the Fortune 500 company, the State Bank of India. He was previously the senior fellow at the International Council for Research in Economic Relations and the Director Economic Research FICCI, the trade body in India. And he has a PhD in economics from Jawaharlal Nehru University, New Delhi, and MA Economics from Delhi School of Economics. He's a very prolific writer and regularly contributes on Indian economy in the press. So I think let's hear him and request Paul to coordinate to make his speech available, followed by discussion. Thank you. Paul, over to you. Yes.
World financial crisis in 2008. We had a dot-com bust.
Oh, you should go to the beginning.
Crisis. If I borrow from a famous economist, an article which came out after the Asian crisis, the important point to note over here is that in the last 2 years, there has been events which has happened with alarming regularity. I mean, these are all tail events, what has happened. And unfortunately, a tail event, the statistical parlance is supposed to happen once in 100 years. So by that logic, I think we have been facing we faced a global financial crisis in 2008. We had a dot-com bust in 2001. In 2020, we had a crisis of pandemic, shook the entire world. In 2022, we have a geopolitical conflict. So it's in this context that I would like to present some thoughts on the Indian economy today. Specifically, the idea of the topic is India is rising, basically in terms of reforms, in terms of resilience, and in terms of recalibration. So I'll share with you some of my thoughts and some of the numbers in the course of the next half an hour, and it will be glad actually to know your thoughts on this. Just give me a minute as I browse through my presentation. Yeah, see, basically the important point to note is that if you actually look at the global economy, the geopolitical conflict has changed the macro significantly. If you look into the pre-war and now, what's happening right now, in terms of global growth and in terms of domestic inflation, I think as all of you know, growth has trending down. The global growth forecast is now at 3.2%. The US Fed rate, which is 0.25%, actually this rate has now moved closer to 4% now. So in a pre-war scenario, we were actually at a rate which is close to zero. Now we are at a rate which is 4%, which is supposed to go even higher in the next December Fed meeting and also in the February to Fed meeting. The growth of RBI has been revised down. Inflation has moved up. Current account deficit as a percentage of GDP has actually increased. Fiscal deficit, of course, stays at the same level. I think this is one of the learnings from the crisis as far as India is concerned. India was one of the only few countries who has maintained a fiscal discipline, and that has created back in terms of a better revenue resource mobilization. The rupee rate has done something which India has remarkably well, because if you look into the rupee movement, it's more of a dollar strengthening rather than a rupee weakness. Because if you look into the exchange rate appreciation as a dollar appreciation, which has happened around close to I think 10%, and the Indian rupee has actually depreciated only by 7%. So whenever a depreciation is lower than the dollar index appreciation, it seems that most of it is because of the dollar strengthening. The yields, despite a significantly large government borrowing program, the 10-year G-Sec yields in India has been remarkably anchored, and it is also very surprising that even when the global yields have witnessed such significant volatility, the RBI has already raised the repo rate by 190 basis points, and foreign exchange reserves have declined by over 100 billion. But the important point to note is that the declining foreign exchange reserves is now being recouped, and also 70% of the foreign exchange reserve decline was because of revaluation effects. So as the US yields decline, and also as some of the swap transactions mature on the part of the RBI, we will see that the RBI will be recouping some of the foreign exchange reserves gain. So the important point to note here is that why I call it a resilience of the Indian economy, because look into India's fiscal deficit, look into India's exchange rate, look into India's 10-year G-Sec yields, look into India's forex reserves. I think everywhere there is something that India needs to be proud of. So in terms of the resilience. Now, if you look into our state of the economy, we are now at a much better pedestal even in tumultuous times. If you look into the global growth forecast, India's growth forecast is now at 6.1%. At 6.1%, India will still remain the fastest growing economy next year. If you look into China, China's growth forecast has been significantly reduced downwards, and I have a doubt that the 2023 forecast of 4.4% will be met, because China's economy has been showing a lot of problems recently. As you know, that the China's property sector sales has now been declining for this last 11 months continuously. In place of that, the Indian real estate sector has done very well. I mean, sales in the first quarter of the current financial year and also in the second quarter of the current financial year, residential sales has continued to grow at an expanded rate. As you know, the country-wise inflation, Indian inflation is currently at 6.8%, and it is going to decline even further from the current levels. If I go by our prognosis, and possibly you could see a sub 6% inflation rate within the RBI band at the end of March. The import cover of India is significantly on the higher side. As the number which is showing in terms of the currency variation, even as the US dollar has appreciated, dollar is close to 10%, the Indian currency is at the top of the peak by depreciating only by 7.8%, which is, I think, a remarkable not that the Brazilian real has been the best performing currency, but its interest rate in Brazil, as all of you know, is more than 10%. So that could be one of the reasons why Brazilian currency is not weakened much, but there's something which it hides more than it reveals. But the Indian rupee has performed remarkably well, and if you look into all currencies, South Asian currencies, India is at the top of the peak. So that's something of an achievement. We need to thank our country in terms of the resilience. This is one of the numbers which I wanted to show you, because as per the IMF predictions, India's economy is going to meet the US 5 trillion economy by 2027. You know, in 2014, India was the 10th largest economy. In 2022, India has moved to the 5th place, and as per all our forecasts, Indian economy is likely to touch US 5 trillion by 2027. We did the first trillion in 57 years, the second trillion we did in 7 years, the third trillion we did in 7 years, the fourth trillion we did in 3 years, and the fifth in 3 years. Interestingly, because of the pandemic, our splits have been maybe possibly pushed back by 2 to 3 years in terms of our achievement. But the important point to note is that the fifth largest, India is now adding every trillion 3 years. But you know, remarkably, in the last 1 year, last 2 years, Indian economy added 950 US billion. So basically, the explanation is that every 2 trillion, instead of 3 years, we did 1 trillion every 2 years. If we are able to do every 1 trillion 2 years, you can estimate that in the next 30 years, what will be the size of the Indian economy. So I think that's the explanation we are looking forward. Last 2 years, maybe that number could be a little bit on the higher side because India has emerged from the pandemic, but we did 950 billion added to the economy in the last 2 years, which was indeed an achievement which we should be proud of. This is the numbers again. I think we have been saying this over the last several years that India is likely to be the third largest economy by FY28. As you saw in 2014, India was the 10th largest economy with a nominal GDP of around 200 billion. This will go up to 3.9 billion in the current year, basically by March 2023, and possibly by 2027, India is likely to attain the third largest, the fifth largest economic rank by 2028. I think 2028 clearly that it will be March 2029. The GDP, but the thing is that I think there's also data which we all of us miss out, is that the Indian GDP in purchasing power parity, India is now the third largest economy. And we were actually at 2007, but China was there at 2000. Just can you give me one minute, please? Just 1 minute, I will take. We're trying to mean is that India actually, what China was in 2007, India is actually there in 2007, and in previous numbers, India actually need to grow at 9% per annum in dollar terms, reach 5 trillion in 2027. That means that it is not 2028, and as per IMF's calendar year 2027. And in 2023, we have actually expected by 8% in dollar terms. So we have done that, and I don't think there will be any problem in doing that in the So next is basically what the Indian 5 trillion economy look like. If you look at the Indian economy today, I mean, this is a projection that India needs to grow at 9% average nominal unit terms. We have more than 10% in 2022. The share of the manufacturing needs to reach 22% of the current level of 15%. As you know, the Indian government has taken a lot of initiative in terms of the manufacturing. I think India is now at the cornerstone of a China Plus One strategy. And recently there has been use of Apple and Foxconn setting up manufacturing plants in India, and India is now actually trying to capture the lower rate of the pyramid. Lower rate of the pyramid in China has vacated in 2008. And as all of you know that China in 2008, when the global crisis happened, there was this Atmanirbhar, the Indian economy, actually the US economy went inwards and was promoted shale production in a big way. So so what the India did in terms of doing its Atmanirbhar package, I think there is merit in it, and possibly in the future it will be up India in big time, because at the end of the day, India needs to increase its share in manufacturing from the current level of 20 to 32%. The share of agriculture should actually come down from the current levels. And the important point is that we need to have more globally competitive farms to accelerate growth. Existing large companies, as well as several kinds of mid-sized companies, needs to grow up in scale. And this is one important message which we need to take from the Indian perspective, that large companies, and this is happening actually, as I said, happening because Indian economic formalization is happening at a breakneck speed. Every year, we did a recent analysis recently. As you know, that the share of informal economy in the Indian economy is around 50%, but we did a recent analysis where we found out that this number was actually around 20%. The share of the informal economy in the Indian economy has come down to around 20% from the level. Of course, the employment share in the Indian context, there is a large element of informality in the labor contracts. But my point to note over here is that I think the government recently, the Indian government has also taken a lot of initiative in terms of strengthening the e-shram portal, and whereby 28 more unregistered, 180 million unregistered workers have actually registered, and these are all informal workers. So at the end of the day, the government has been able to maintain a huge comprehensive database of the informality of the employment contracts in India, and I am sure that in the future this will help us in good state in terms of formalizing the labor contracts and giving the informal workers a better deal. So we are doing formalization at a breakneck speed. The tax to GDP ratio in the Indian context has actually started to, because India was the only country where the tax to GDP ratio increased during the pandemic. Today this number is close to around 11%. The currency calculation as a percentage of GDP today is actually lower than that was in 2011. The currency to GDP ratio, in fact, as all of you know, the India was in the midst of the festive season right now, and it is the first time in the last 20 years that the currency circulation has declined during the festive season. The total UPI transactions today is around 12 trillion. So that's a humongous number, and as all of you know, the government has also invested 2 trillion in the PLI manufacturing scheme, and the total EPT transfers, direct benefit transfers today is actually around 25 trillion. The capital adequacy ratio of the Indian banks is currently at 16.7%, which is even larger than the US economy. So, and the most important thing is that the way we are doing the empowerment of the women today, that is remarkable, because around 52% of the all skills the government is actually doing is going to women in terms of entrepreneurs. You know that recently what happened, and this has actually also with the pandemic. The latest RBI data show that the incremental deposits coming into the banking system, out of the 66% in the rural areas have gone to women. 35% of overall incremental deposits have actually been opened by women. This is something of a remarkable achievement. And the other important point is that another important thing that the government is actually running a program of 24 aspirational districts whereby trying to push credit flow, and the results are actually humongous. Some of this, we are actually now seeing that in the Tier 3 and the Tier 2 cities of India, where the urban population is actually on the lower side and more rural population, there are a large part of the incremental housing loans are going to the women. And this number is actually around 23 to 24% in Tier 3 cities. So basically what is happening is that women are now opening accounts, women now taking loans, and women are actually getting financially empowered. And the next big level of achievement for the Indian economy should come actually from women empowerment. As all of you know, the more the women are empowered, the more is basically, I mean, the women, as all always the base start in terms of maintaining the financial balance of an household, and also the base start if you giving the opportunities, moving up the ladder, and at the end of the day, there's more and more women entrepreneurs coming to the picture. I think this is a good advertisement for Indian economy, as also it is going to add to the India's GDP. So this is some of the numbers which I thought I will share with you. Next is basically the banks actually need to create a significant amount of incremental bank credit, and PSBs, public sector banks today are actually I think cornerstone of this year, and so the next big trillion could be credit revolution is already happening. This year, do you know that the total resource flow to the commercial sector could actually be around 30 trillion, which is a record number given that, but Indian economy and credit growth is actually running at multi-year high. It is currently at 17.9%. So that's a number which is basically all of us should be aware of. Then what could be the India's 5 trillion economy look like is basically in Maharashtra, Tamil Nadu, Uttar Pradesh, Karnataka, Gujarat. All these states basically could actually add a significant share to the India's GDP in FY28. And the important point to that states that India is actually a very diverse country. Maharashtra is a state, Uttar Pradesh is a state which looks like Japan, West Bengal is a state which looks like Vietnam, Gujarat is a state which looks more like UK, Maharashtra is a state which looks more like Japan, Rajasthan is a state I think which so all Indian states are actually equivalent to some of the larger global economic countries. So from that point of view, India is actually a conglomeration of global countries, and all these states are actually going to help India's progression in the next 4 to 5 years. A large part of this has been accelerated because of the pandemic, and we are sure that this process is likely to continue in the near future also. This is something which I wanted to share with you. That the Indian economy is now employing maximum headwinds. The GST collection has been consistently above 1 trillion since May 2020, since June 2021. It's a remarkable achievement. The government has invested 26 billion in 14 sectors, which will create 60 lakh jobs in the next 5 years. Electronics, auto, pharma, solar, telecom, food products, steel, textile, drones are some of them. The labor force formalization rate is now currently more than 20%, and the FDI gross flow is currently at 83.6 billion. So these are again all numbers. These are very remarkable numbers in terms of the achievements. If you look into India's demat accounts, we have added 62.5 million demat accounts in the last 3 years. As you know that the Indian household savings in mutual funds and equity has not been around more than 3 trillion, even in currently. In US, this number is more than 300 billion. Indian exports of goods and services, there is a product which is called one district, one product that is now actually doing wonders. Indian exports was at 420 billion last year. It has now become 250 billion. Now 670 billion is the total exports of goods and services. And these exports and goods and services, the government is actually targeting at 1 trillion. The capital flows has been at all-time high. It has been 42 billion. It's just across 1583 deals. So again, this talks about the good things. So this is another good thing which has been happening. The other thing, as all of you know, Indian banking sector is now most adequately capitalized. It is compared to developed countries. The scheduled commercial gross NPAs are at lowest levels. There has been remarkable improvement in capital adequacy ratio. Banks are sound. Most of the bad loans are provisioned enough, and banks are actually poised to support the next level of economic growth. This is basically the Indian banking sector. I just wanted to give you some numbers. The credit growth of the banking sector has now increased by 2 times what it was in FY14. The deposit growth has increased by 2.1 times. The net profit of the banking system has increased by 2 times over the last 8 years. So you can understand how the way the Indian banking sector has moved. The total number of banks in India has now remarkable consolidation. New type of banks are now opening new vistas for customers on the periphery. Consolidation is leading to more profitable non-bank players in synergy with the banks, and the biggest financial inclusion in the world, which has brought the unbanked under the ending of banking and social securities. 470 million PMDD accounts have been opened recently. These are banks are supporting the national building. As I said to you, 25 trillion is the amount which has been transmitted through the bank accounts to 8.3 billion beneficiaries. That means 830 crore beneficiaries have 8.3 billion, 830 crore people. Then the other thing is that the Jan Surakha Yojana, which is basically the insurance scheme which has been made available to the bottom of the pyramid, close to 50 crore, that is 500 billion accounts has been opened. And this is a remarkable achievement, because when you are opening accounts at the lowest part of the society, this number is also amazing. 100 cities, 5151 projects, and 27 billion has been spent on improving the urban regional retrofitting. The Indian currency is also going places, as I showed to you, that India is now, rupee is now accepted across 34 countries. Singapore has already adopted UPI, and this is going to help the international of the Indian rupee in a big way. The Jal Jeevan mission the government is running, every rural household in India, India has 6 lakh villages, will get tapped house water by 2024. The entire rural areas is getting electrified. The Deen Dayal Upadhyaya scheme the government is running has ensured that every village in India is actually electrified. India has around 6 lakh villages, as I mentioned. Then there is women empowerment, which I talked to you. The financial empowerment of women for different schemes. As you can see, that the numbers goes up to 81%. More than 350 million loans have been sanctioned. The Prime Minister PM Mudra Yojana, which is a scheme for the lower borrowers who actually want to set up shops or artisans. 68% are women and 51% are from weaker sections. The financialization of women has taken massive strides, and this is deepening our financial services further. This is altering the social fabric for a better tomorrow. As I said to you, the share of women depositors in incremental deposits have increased significantly. The Samhita scheme is changing the rural land property. The drone survey, we have completed around 2 lakh villages. We have handed out maps for 1,40,000 villages. And this Samhita scheme is going to have a scheme which the government is running at speed, where every village in India should have a digital, and every house in India, in the villages, of which are 6 lakh villages, will have a property ownership plan, which will be validated by using the drone technology. And once this is done, all these litigations in the real estate sector, others, in the name of you can understand that if 6 lakh villages in India are actually having a land property ownership pattern which is digitized, what's the amount of revolution it will get into the real estate sector? And the benefits of already, we are saying that users are now getting loans in districts of India, whereby that were backward in nature. And these are, as I said to you, there are 124 aspirational districts which the government of India is running out of 700 districts in India. And this is one of the reasons why this scheme is going to be so successful. This is the digital modes of payments. UPI transaction has increased by 1,220 times in terms of US billion. This number has increased from 69 billion to 62941 billion in H1 the first year. The number of POS machines in India is now gone from 1.5 lakhs, 15 lakhs to around 65 lakhs. The number of UPI transactions have gone from 18 million in 2016-17 to 45968 million in 2012-11-22. In the first half of current year, it is already at 37050 million. That means if we just extrapolate this number, these numbers would be as 80,000 million this year. You can understand the new power of evolution of UPI transaction, what it has done to the Indian economy in terms of more digital and less cash. The RBI Digital Fintech Index is also showing a remarkable growth. This is the national infrastructure pipeline, which wants to act as a force multiplier. This is the number of projects, this is the number of total capital outlay, and this is the projects which is actually in the development stage. Together with the Prime Minister Gati Shakti, a digital platform which will bring 16 ministries, dollars and dollars together for integrated planning, then I think can make India's infrastructure in the league of one of the best. And I think this is one thing the government of India is doing very assiduously and very carefully. This is an Ambedkar with the government of India, with the Honorable Prime Minister have shared the infrastructure, China plus one strategy and self-reliance. Then there will be a closing demographic dividend gas, but as you know that India needs to reap the benefits of this demographic dividend quickly. Transition to net zero and technology will be the force multipliers in the current day. We have already seen what is the digitization which is happening, and this could be a remarkable thing. This is a new dawn since 2014 which is happening to the banking sector. The banking sector is now collaborating with startups, non-bank financial companies to use fusion in a banking for model, whereby the digitality of a customer will be the centricity. All loans will be given to the customers, irrespective of, without any collateral. Consolidation has been happening in the banking sector. IFSC has been providing innovative fintech and structured financial products. This is an international. The GST is now become the backbone of efficient taxation architecture. IBC is a first resolution of unviable businesses. The development financial institution has been set up for infrastructure financing. The bad bank has also been set up recently to dedicated RCs. Digital banking units have been established across the country to move towards a cashless economy, and cash flow-based lending is going to be the motto of the future, whereby co-lending, digitization, and multiple database assimilation will ensure that the banks can give a loan in 1 minute to the customers. And the central bank digital currency has already been launched by the RBI, and this is going to also be a game changer for Indian currency's internationalization. And maybe, who knows, that as all of you know that the dollar still remains the reserve currency, maybe, and there has been not much progress in other currencies in terms of capturing the imagination of the global world for whatever reasons. But the central bank digital currency could actually make that India's payment system, which is so internationally recognized, could actually become a harbinger of things in the future to come. Because once it is introduced, India, this could actually make it a seamless transfer across borders. So these are all changes for the future, and we must appreciate it. Finally, what is the reforms agenda for the next 25 years that India goes to Ambedkar, as we have been mentioning? First is the green financing oriented towards sustainable goals. The massive investment is underway now in green energy and green mobility. The ESG sector is going to be the interplay between the banking for an industry 4 revolution. Then there's a digitization of agriculture and MSc technologies, which we are doing. Data intensive technologies, blockchain technology. This is ensure that everything from farm to fork is digitized in terms of the agriculture and MSc lending. And as all of you know, the MSc sector in India has also been significantly formalized. 12 champion service sectors are identified for contactless services. These are the IT, financial, environmental, education, tourism, hospitality, medical value travel, transport and logistics, account and finance, legal, communication, construction and engineering, making India to position India as new human manufacturing base for world, domestic savings, as all of you know, and merchandise and service exposed to grow smartly. So this all will actually seek self-sufficiency for India. So I will end my actions with a quote from Mahatma Gandhi. Today in India, we actually became that your beliefs, once you do it, become your thoughts became your words became your actions became your habits, habit becomes your values, and your values becomes your destiny. Truly, we are actually have been able to do things which we have not thought earlier before, and maybe we'll be able to do more things as we progress in the next 20 to 25 years. Of course, there will be challenges, but I think getting over the challenges is the motto of the hour, because no one thought that the UPI transaction, which we have been pushing so hard, would now actually become the cornerstone and take a large part of the cash in terms of formalizing the economy. So I will actually end here, and I have to rush off. So maybe I will not be able to take questions, but I thank the organizers and Professor Pradhan for XLNI for giving me this opportunity to speak on this forum. I'll be glad to speak at another day, but today I may have to take a leave because I have some very urgent commitments today in our organization. Thank you a lot. Thank you, Professor Pradhan, and all of you for giving me this kind of opportunity. And if you have any questions, you can always write back to me answered those questions. Thank you so much. Thank you.
We
Yes,
thank Paul. Paul, I think it was a good presentation by Dr. Soumya Ghosh, and we must thank him for very detailed, the presentation of the Indian data. And if you allow me to summarize a
yes,
few
please.
points before we close. So I think the points, all what was presented by Dr. Ghosh, there's a lot of bright spots that I can see in the Indian economy. India continue to remain as the growth outperformer in the global market. I think today, even at 6% growth, 7% this fiscal, maybe a little lower next fiscal, expected to be 6%, still much stronger as compared to almost every country in the world. So therefore, some of our macroeconomic reforms, the incentive structure in place during the COVID and post-COVID, and the digital front, all of them have earned a lot of dividends, and the growth is sustaining. The resilience of the Indian economy has been observed in recent times. And I think, as Dr. Ghosh rightly pointed out, the service sector is doing phenomenally stronger in the Indian economy, almost is getting into 40% close to the GDP. The manufacturing sectors did slow down pre-COVID, and it was further accentuated during the COVID, but are showing signs of revival. We have seen many pockets of manufacturing have seen their revival. And the most important is within the service sector, the financial sector looks much stronger. The equity market has been vibrant, and the debt markets also have provided liquidity to both government and the corporate. The corporate balance sheets today are healthy, looks stronger. The corporate sector has huge cash reserves, and I'm sure if they are going to plow back, and this will become much stronger growth earnings. I'm sure we're going to see in the near future. The government policy of the production-linked incentives, PLI, which was in the form of industrial subsidy, and the self-reliance of the policy of self-reliance by the government, what we call as Atmanirbhar Bharat. Atmanirbhar Bharat is basically called the self-reliance, trying to produce some of the import substitutes with production-linked incentives, and I think have been picking up a growth momentum. On the whole, I think the growth is sustained and resilience. The technology has become an enabler. India's digitization drives, which got accentuated during COVID, nevertheless, but was there. It was initiated well before. Have facilitated the entire ecosystem of integrating the financial economy and making the transaction processing particularly a lot more cheaper. And this digital economy has enabled the logistics, the delivery sector, quite made them very stronger. Indian equity market is a point which I thought I must mention, that it's decoupling. I think we have the Sensex almost at the peak, when many of the economists, their equity market has corrected quite substantial. In the US, close to 30 to 40% correction has taken place. And what I think that compares Indian economy quite stronger, the financial sector. So the theory, so the empirists have trying to prove if the Indian equity market is decoupling, it's not, it's getting out of the cycle of the global economy. On the financial sector front, the banks' non-performing assets are coming down, the balance sheets are much stronger, and the bank's credit offtake are also gaining ground, and I'm sure that would add to fuel to growth. Indian policy regimes of the ease of doing business have improved, and specifically the two measures, the demonetization and the GST, the goods and services tax, have brought about harmonizations of the transparency in the economy. The another sector, which is non-bank finance companies, are doing much better. They have come out of the NBFC crisis in 2018, and their balance sheets are also equally stronger. Although the Indian rupee has depreciated to about over 80 US dollar, but I think in real terms, the depreciation has not been stronger, has not been much. And I think the rupee is still okay compared to its real value. And when the many of the emerging market currencies have also fallen, and the rupee in that context is also showing resilience. So therefore, sum it up, the India still remains as the bright spot. But of course, going forward, much depends on the global recession, the global inflation, which is surging quite high in the US and elsewhere, Europe. Though there is recently some decline in inflation, but we have to wait and watch and see whether globally the inflation is on the downturn. And the global central bank actions and liquidity also are in the watch. So therefore, I think net, we can say that the Indian economy appears to be resilient and strong. It's coming out to be stronger. So I think these are my brief observations. If there are any questions, we'll be happy to take up. And Paul, I think, thank you very much. Thank you for the opportunity for us to present the Indian economy in this global forum. I am sure this is a bright spot, as I said, and we look forward to another discussion on Chinese economy.
Indeed.
Thank you very much.
Yeah, thank you very much, Prof. Thank you very much for giving a summary to what we heard from Dr. Ghosh. So, of course, we know we cannot have global conversation, especially looking at the structure of GEIF that target emerging markets more specifically. We cannot have conversation without dealing with India and, of course, China, the two largest emerging market economies in the world. So that is why we thought that it's very essential that we can have this conversation and on India. And thank you very much for giving that a bright summary of what we watched earlier from Dr. Ghosh. So we've not received anything from the audience, so I'm sure all went down well. And this session again is recorded, made available on our YouTube channel in the coming days. We have 2 more sessions to go for today, day 1 of the GEIF, and these are our plenary sessions. So we're going to be having our first plenary session for today at 15 CET, that is 3 p.m. Central European Time. And it's going to focus on the future of global health. How can we pay for healthcare financing? So that's going to be our next session. It's for 1 hour and 15 minutes. We have speakers. We have Lema Sambet he's a professor at the University of Maryland. We have Dr. Jennifer Blanke. She's a non-executive director of ARC, African Risk Capacity Limited. And she's worked with several organizations, including as a chief economist for the World Economic Forum. We have Adesimbo Okri. She's the CEO of Avon Healthcare in Africa here. And of course, moderated by our very own Professor Azhar Hussein, who is a member of the International Board of Standards of the ICCE. So our next session, looking at the time now, starting about 1 hour time. So in less than, let's say, 1 hour, 55 minutes, we're starting our next session, which is our first plenary session for the Global Economic Ideas Festival 2023. Day 1, which is going to focus on the future of global health. Again, we'll be sending your way via email the link for you to join directly. So please do watch out in your emails so you can have access to the right link to click, because as I said earlier, in the beginning of this festival, all the sessions are curated separately. So you need to make sure you click on the correct link to join the session. So we'll come your way in about 55 minutes time for our first plenary session for today, and we hope to see you all join us in that session. Come with your questions about the topic that I've raised so that we can get our speakers to address those questions. This has been GEIF, Global Economic Ideas Festival 2023, brought to you by the ICCE, the Institute of Certified Chartered Economists. So we'll meet again in our next session. Thank you very much.
Thank you, Paul. Thank you.